Good afternoon and welcome to the Trading Talk Uncensored live Q&A session. My name is Danny and I will give you the webinar today. Okay, this is the agenda. We begin with the previous questions that our team has prepared, which is this slide over here. Then the second part will be the dynamic questions, which are questions that you guys can ask along the webinar, and this can be regardless, by the way, to the topic that we're learning. So that means that even if we answer one subject, you can ask freely what's on your mind. That's the purpose of this webinar. Okay, the third part will be more informative, just to share with you some links to save you the trouble to find it by yourselves. Nothing too crazy. And lastly, we have here the approach, the two different analysis approach, technical and fundamental approach. This slide is usually to help us emphasize the idea, but I'd rather use live data on the chart and to show you to use real numbers. Okay, any capital markets and trading information disclosed in this webinar is provided for informative purposes only and should not be constructed or applied as an investment advice, recommendation, or a suggestion. It's also important to know that this webinar is recorded. It's recorded and it will be uploaded to YouTube later on to our channel. And not only this webinar, but a lot of other, other topics as well. It means analysis webinars and risk money management and all kind of educational content that you can find in our website, which you in our YouTube channel. And we will begin, as I said, the first part will be the previous questions that we have down here. We will break down each question. We're going to take it, paste it in our notepad right here. Okay. And we will open the website and we will see what's the best way we can answer. So currently we have AUD Canadian, Aussie Canadian displayed on the chart. Of course, we can pick something else for the sake of the to demonstrate the question. We're gonna fold it down, clicking by two tiny arrows here. I would also like to say that this the interface here is called the Web Trader. Okay, so for people who are less familiar with it, it's embedded in our website. You don't need to download or install anything. You log in with your email and password and click on Web Trading or Web Trader to get to here. And like I said, this is what we're going to use today. Okay, so let's pick something else. I guess we saw here another question about gold. Okay, so we can at the moment, maybe we can open up gold, use it also as an example, and gold will be under commodities. So we're going to click on commodities and under metals, and we have gold. It even has a signal here. And then we will expand the chart so it will be all over the screen, and we will click buy or sell. It doesn't really matter, just to open the order entry. Okay, and we will also break down the lot size to 0.01, and we will enable the crosshair so we can get data from the candles. All right, now the question here is, what is AvaProtect? So AvaProtect is a unique product in our platform. Unfortunately, MT4 and MT5 does not have this product, AvaProtect, okay, and you can use it in two ways. One way is by clicking on the golden shield here, okay, and then it marks the box here, or you can just mark the box. Now, what exactly that product does? That product lets you protect the position for a certain time frame. Whatever you lost during the coverage will be returned, okay, and there is a fee when the product is active. What does that mean? That means that, as you can see, if I'll click here on the box, it's going to let me choose a time frame between 1 hour up to 2 days. Now, as you can see, there is a fee here, and this fee will change according to two things. One, the time length that we pick. I want you to notice how the fee increases. Now it's 585, and while we increase, so the fee increases as well. The second thing that has effect on the fee is obviously the lot size. The size of the position also determines the fee. So if, for instance, at the moment we have 1 unit, this is the minimum lot size, 0.01. If we increase, then the fee increases as well, and then we can keep going like that, and we can immediately see that the first lot size was 17.5, and if we multiply that to 10 units, it's now 175. Okay, and as we've learned from what I wrote here, that means that during those 2 days, whatever I will lose will be returned to my account. Okay, now, how does that work exactly? The way that it works is very simple. We determine the length that we would like to cover in advance. We can see the expiry of when the protection will end. Now, it's important to remember that we are going to get back only what we've lost during the duration. Meaning, if, for instance, at the moment we're covered for 2 days, but I keep the position for a week. Okay, let's say, and now price is 29.50. Let's make a take profit and a stop loss to help us assess and simulate what can be the possible profit and loss versus the fee. Let me just quickly look at the question again with gold. Will gold get to the 3,000 mark? Okay. Well, let's assume that it can. Let's assume that it can get to the 3,000 mark. And we will also place a line at that. Just a second. Okay. Okay, so what if I want to land that line on 3,000 exactly, and I don't want to click and drag it on the chart? So what can I do is I can just place it like this, and then I can select it, and then I click on the white wheel, and then I set here 3,000. And with this 3,000, I can even choose a color for that. The green, since we're targeting this as our profit. And we will simply click here on the take profit and make it 3,000. Okay, now we can also use the same reference for the stop loss and expect $50 down, which will be roughly a flat 2,900. Okay, great. And now we can make comparison with the fee. Okay, so just a second, we'll write it down. And both of them can lead us to, just a second, to 500 roughly, profit or loss. Maybe, unfortunately, we can use this execute when price hits and then to choose a pending sell, pending buy, sorry. So we would have to watch the numbers changing, but we understand that this is roughly 500, right, for each. Okay, now in this scenario, the 175 that we're going to pay for the coverage to cover this position, it would make sense with the profit and loss that we're planning to make, right? I'm sure that everybody here in the audience would be happy to pay 175 to make $500, or to pay 175 to get back 500 that we can potentially lose, right? Now, it's important to understand that neither of those scenarios, the take profit and the stop loss, is not guaranteed, and it can get, it's not necessarily going to go all the way. I mean, it can go a little higher, it can go a little lower, but it's not guaranteed to reach any of those levels. With that being said, still, the profit that I will make, regardless the take profit, as long as it will get higher, I'll make profits, and if it gets lower, I'll have losses. Still, even if it doesn't trigger the stop loss and I have lost a certain amount, I will still get it back. In other words, what I'm telling you guys is that I don't have to use neither of those. I can if I want to better design my position and work with the proper strategy, but even if I don't do so and I click here buy, I can still make profits and have losses, and I will be reimbursed with a partial amount. Now, what I wanted to tell you guys is if I keep the position open and I keep, even after the coverage, I will have losses. Okay, so whatever I will lose afterwards will not be reimbursed. Okay, and it's important to know that because at the moment we're covered for 2 days. If I kept it for a week and I lost another 500 is an example, so I will not get them back, right? Only the initial 500 which I've lost during the coverage. Okay, that's one thing it's important to know. All right, great. And on the same matter, since we're looking at gold, and the question here is asking, one more thing, just one more thing about AvaProtect. It's useful for Forex, gold, and silver. Okay, not anything else at the moment. So if you see that golden shield, you can use it. And if you don't, you know why. Okay, it's Forex, gold, and silver. Just a moment. Excellent. Now we can carry on with ease. And as the question here is asking, will gold get to 3,000 mark? Well, I can maybe analyze the market, but I'm no prophet. So of course, nobody can guarantee it will get there. But if I'll be honest, looking at such a bullish trend, looking at the short term, we're looking at the long term, and gold seem to undeniably, well, potentially get to the 3,000 mark. If you ask my personal opinion, I think that it might even happen before the end of next week. Okay, again, there is no guarantee, guys. There's no guarantee. The economy can change. There's sudden changes all the time. But still, again, we're looking at more than 2 months straight. Of course, there are retracement here and there. Last week, gold went down quite considerably. Let me just show you that real quick. Okay, but still, overall, we're expecting gold to indeed, first time in history, get to those levels. And of course, nobody has an exact grip on what will happen if it does. Yeah, we should all know that. All right. Yeah. Other than that, we can just proceed. Again, it's really difficult to answer this kind of questions. I mean, you can see the trend here, you can see the statistics, and it's just very visible. Okay. Yeah. If I would like to write down an answer, possibly at the current rate, gold can possibly reach the $3,000 mark by next week. Again, it's not guaranteed. This is why I wrote possibly at the current and not anything guaranteed. Okay. Now, what is AvaProtect? We wrote down. Let's take that description. We're going to take it. We don't have to remember it at all because it's already here in the information bubble. Yeah, if I point in here on the eye, I have a very nice explanation, but I'd rather put it in my own words for you guys. You can use whatever explanation you prefer. Let's make it smaller a bit. Okay, let's like this. Yeah, Forex, gold and silver. I'm just gonna write it down. If you're trading anything other than that, you will see why it's missing. AvaProtect is usable for Forex, gold, and silver. Okay, and we'll maybe make it lower as well, just it will fit better to our presentation. Okay, how can I save my analysis layout on the chart? Okay, so I guess this question, it's natural that it will come from MT4, MT5 user, because on there are different profile and different layouts. But in here in the web trader, you don't have to do any of that. Once you've finished your analysis, okay, so it should stay where you left it. Just a second. Okay, it should stay where you left it, and even if I just a second, I want to get a certain picture for you guys. Okay, let's leave it like this. Let's maybe add just now. if I leave the chart with those on, then it should, okay, and let's suppose I go to something else, like Nasdaq is an example. Okay, well, we have an analysis here as well. Let's go back to something else, clean. Okay, you see, so we have the indicators, but what I want to see is if I'll go back to gold, you see I still have it on the chart. The only thing that I needed to change is the shape of how the chart is displayed, and this can happen with a very simple action. All I gotta do is just click on the column price. You see where there is the price, I can click anywhere, it doesn't really make a difference, and then click and drag. Yeah, click and drag, and this way I can better customize the chart to get to the picture that we want. Yeah, there is no specific way to save it. It just save once you click here on indicators and you click save, it just stays. Okay, same apply with the accessories we have here. Okay, so there is no specific way. So how can I save? The analysis and accessories layout on the chart will stay even after closing the chart and reopening it. Okay, it shouldn't go away as I showed you guys. Okay, the following question here is how can I pick the best instrument for me? Okay, so this is a very interesting question. Just a moment. Okay, so this question, we're gonna take it and we're gonna paste it in our notepad just like that. And how can I pick? Now, first of all, it's very subjective what instrument is the best instrument, and everybody can say something else. And I just say that all the instruments are the best instrument, but let me explain to you why. The reason that I said that is because we can make money with everything in theory, right? But there are still parameters that we can choose by which instrument will be preferable. For instance, just a second, for instance, let's maybe have multiple charts, then we'll have multiple idea to compare. We have gold, we have silver, we have Netflix, which is currently closed, so it doesn't help us too much. Let's also have Nasdaq. And let's bring up corn. Or even coffee. Let's go with coffee, why not? Okay, so in here and in here we have some nice analysis and indicators. As we can see, silver and coffee are clean. It's also important to understand that whatever is with the blue rectangle is actually the chart that is selected and being modified by that the toolbar will be, okay, and the order entry as well. So as you can see, coffee is with a blue rectangle, and this is what is selected, okay. And if I'll click on gold, so this is why it's what is selected now. And pay attention if you're working with this kind of layout with multiple, doesn't it necessarily need to be 4, even 3 or 2 charts. Just make sure that after you select what you want to select, you click buy or sell to enable the order entry, because at the moment we're still with coffee, right? So if I'll click here buy or sell, this will reset back to the selected chart. Now, how can I pick the best instrument? So of course, like I said, there is no best, but we can definitely have some few things to acknowledge to help us assess preferable choice. Okay, so we have few instruments. We have gold, we have coffee, we have Nasdaq, and we have silver. Now, there are a few things that we can judge by and decide. So one factor is the movement, and another factor is the not the price, but the necessary margin, okay, to do that. And of course, analysis is also part of the now. What do I mean by that? Okay, because at the moment we have movement, necessary margin, and analysis. All those things can help you make comparison between different assets. You can choose by which instrument has the 3 of those will help you choose. So what do I mean by that? At the moment we're looking at gold. Let's begin with the necessary margin. I think it will be easier this way. Okay, we can see that the cost for one ounce, 1 unit for gold on this account is 147. So to take this position, I'll have to use 147 of my margin. Okay. Okay, so necessary margin, we'll call it NM, right? Okay, necessary margin. And analysis. We will rate for each instrument. Sorry. Okay, and then we have a, I'd rather do it this way so we won't be confused. Okay. Okay, very, very simple. Now, the necessary margin or the margin impact, it doesn't really, I wrote it this way because I'm used to it, but in here it's called margin margin impact. That's completely fine. Margin requirement, whatever you want to name it. Okay, and we can see now 0.01, the margin impact, which is based on the leverage, is 147. Okay, great. 0.1 at the moment. Now, the movement, we still don't know. Let's apply a simple moving average, or even let's go with ATR. Okay, maybe minimize the length a bit, make it yellow. Okay, and we see that the average movement is $30 per ounce. In other words, since we're looking at, oh, and that's days. Also, one thing that I would like to do is all the charts to set them for days, 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 days. Great. And now we can see. And also, I'd rather apply ATR to all of them. And then it just makes things much, much easier to compare. Again, remember, this process that I'm doing at the moment will keep my analysis on the chart, so I don't have to repeat that process again if I don't want to. Okay, great. So we have 30 for gold. Okay, for 0.01 analysis is we still haven't got there, and that's okay. The second thing is coffee. Let's see, coffee at the moment, 0.01, 3.99. It's also important to remember 1 unit. Okay, 0.01, that means 10 units. Is 3.99. I could plan that and say 400, but no problem. 12.328. Okay. Again, still haven't got there. 200 for Nasdaq, 200 for one lot, and that's also 1 unit. Nasdaq. Okay. Uh, 1,100. Okay, so from previous webinars that we did, the margin impact is based on the leverage. So whatever value I have here, it will be divided by the leverage, and this is how we determine the margin impact. If I'll go to the instrument details, I'll see that 5% is the necessary margin from the value. Okay, 203. Okay, and lastly, silver. Silver is, let's see, silver 0.01, 330. Okay. And this will be 100 units. Great. Great. And the ATR, a little more than $0.50. Okay. Now, what all those numbers actually giving us? Well, as you can see, the necessary margin is one of the criteria that I go by to select if an instrument is good for me or not. That helps me by my account balance to decide if it's good for me or not. In other words, if my account balance at the moment is 100, this, and this, none of them is something that I can trade with my current leverage. Okay, with my current leverage, none of this instruments fits for my balance. Okay, if I would have had 100, if my balance would be 1,000 is an example. Okay, well, gold is something that I could trade. Coffee is something that I could trade. Silver as well. Nasdaq, not really, right? We need more. If my balance is more than 1,000, maybe even 2,000, okay, all of them I can trade, including Nasdaq. Now we're only talking budget. We're only talking budget. We're not even, we didn't get to analysis. It's the preliminary check. You can call it this way. Okay, if we can do it or not. And remember that on top of this, we only took the bare minimum. We took 0.01. So whatever I will extend beyond that, let's suppose that I want to trade all those instruments together and I have diversification in my strategy. I'd like to go with various instruments and I trade coffee and I trade gold and Nasdaq and silver all together. Now, instead of balance of 1,000, I'll need 330 plus 1,100 plus 400 plus 147. But I actually need more than that because we have tendency not to use 100% of our margin. Okay, of course, everybody can work with whatever exposure they want, but personally, I don't like to use all my margin at once. Okay, I'd like to give myself a little room to maneuver in case the market fluctuates against me and I don't wipe out the position. Okay, so this is one way. This is okay, and the movement is another thing. Why do we measure the movement? Who cares if the movement is 30 or 12 or 203? And this is not proportional in any way. 203 and the movement for gold is for silver is $0.50. Well, the reason for that is the size of the instrument, right? Nasdaq, its own value at the moment is 22,000, almost 22, right? 22,200. It's bouncing up and down. Maybe, oh, there we go, you see? Okay, now, if I have the minimum with Nasdaq, this 1 unit, okay, and it's moving per day, it's moving 200, that means that on average, if potentially, if it's moving on an average, I can make $200 with 1 unit. Of course, it could move more or it can move less, and I can lose the same that I can gain, right? With coffee as an example, we see we have 10 units, I'm sorry, and the movement is 12. So 10 times 12.3 is 123. So again, we're talking numbers only, not analysis in any way. This is maybe merely the beginning of technical analysis, but it's nothing established. Okay, just theoretical to help pick the honestly, I would change this question to how can I pick the best instrument to the preferable instrument, but let's keep it like this. Okay, now carry on. With gold as an example, we have 1 unit and it moves 30 per day. So we can make, in theory, if it moves the way that it's moving now, we can make 30 per day. Okay, with silver, it's 100 and it can move $0.50. So if I'll do $0.50, a little more than that, almost 0.6, right? So we can make this per day if it's on its average movement, and we have 0.01. Now, I'll go instrument by instrument, and I'll make this comparison, and I'll combine it with analysis, thinking budget, thinking movement, and then adding the last layer, cherry on top, with analysis. Now, how does analysis take place in terms of choosing the instrument? Well, there are charts. Just a second. There are charts like this. Okay, specifically take coffee because the others are already with analysis. Just a second. All right. Okay. Yeah. For instance, at the moment, it seems like we're finally getting some hint where coffee is heading. But at the moment, if I'll focus on that segment and I'm choosing an instrument to trade, and I'm seeing this this type of analysis, right? We're talking roughly in a period of time of just a second, roughly a month, I'd say, give or take, maybe less, but three weeks, give or take. All right. So is this something that I can analyze? Is this something that I can analyze? One of the things that I would like to do is I would like to go through the analysis that I need to do for each instrument and to see how demanding that is versus what I want to make. So at the moment, if I'll go through the fundamentals and I don't find anything about transportation or about harvesting or about the inventory or anything that can affect the market, no news, and the volume is not really big, and you can see that it consolidated through those levels for a while now. We're looking at, this is days, so this is roughly, we said it's 3 weeks that we're looking at here. Okay, again, in here it looks a bit better, been bullish, then reversed, and then we have here a double hammer here after the weekend. So we're getting somewhere. But if I see this and okay, and I've got no hint to do any analysis, so is this the best instrument for me to trade? Maybe not. Okay, so so what we've learned is we can choose an instrument by certain factors that we decide. Can be the necessary margin, can be the movement, can be analysis, okay? And then combining all together, we can think if this is our instrument or not. Okay, of course, you don't have to be so by the book like me. You can just try and randomly do your own process in your own pace, but the technique that I'm giving you now can maybe help you stay on trail, if it makes sense. It's not mandatory, but I think it can help. Okay, let's take our answer and we will write it down. Okay, let's we can choose an instrument by certain factors, such as necessary margin. Okay, I'm also going to write here margin impact because this is the way that it's displayed on the chart. Average movement and analysis, fundamental analysis, and technical analysis, something here. Okay, yes, that's what I wanted to write. And as an addition, yeah, I think we'll leave it like this because there are many other factors that we can place, but I think those are the main ones. Just a second, I want to bolt them out so it will be easier to notice. Great. So at the moment, we seem that we covered everything that we were requested. We answered the questions, and now I would like to share with you guys the links with the information slide here, and I will do this through our chat. I will paste the first link here for extra education, and then we have the logging and the deposit. We also have here the FAQ and the help center for additional maybe official questions. I want to put it this way, and this is for a real account. Okay. And the academy, we can get it from the website. I'm also going to show you how to do it from the website. Okay. Just a second. So it doesn't really matter where we are at, but I would like to go back to the default screen so it doesn't look too different. Okay. Usually when you open the web trader, it looks like this. Maybe get rid of that as well. Maybe go, well, keep it like this. As you can see at the bottom of the line here, there is this play button, and there are two things. There is Academy, to go to the Academy, and the upper one is Tutorials. And if I'll click on Tutorials, we can see all different topics here. We can scroll down. We're going to click and drag it down like that. And we don't even need to leave the website. We can stay here, pick whatever we want, and enter orders. Okay, we click here on play, and immediately in our website, we can enjoy that. Okay, so that is very, very simple and accessible. And as an addition, as I said in the beginning of the webinar, there are lots and lots of content in our YouTube channel, recorded content for you guys to enjoy. And now, before we say goodbye for today, I would like to give you guys the benefit of this webinar, which is a one-on-one premium market review with your senior account manager. Okay, this is the code. I'm also gonna share it with you on via the chat. You can paste it and give it to your senior account manager for a one-on-one premium review. And to my personal opinion, this might be the most useful, practical help that you can get rather than watching a video, because then you have a live person with you on the line, so you can answer the questions and see the answers on the screen. And it's practical. It's practical, and use it. Okay, other than that, it's been a pleasure giving you guys the webinar today. I hope it helps. I hope you've learned something new today. Wish you all profitable week. Best of luck with trading. Join us next time and have a good day.